Hello, and welcome back to Coin Lady channel. I think Raoul Pal says some really insightful things about this kind of thing. Now, XRP holder Raoul Pal, who most of you have probably heard of by now, is a former executive at Goldman Sachs. Famous in the cryptocurrency community, with 1 million or more followers on X social networking site. Real Vision was founded by him. Also, he thinks XRP is likely to touch $10 soon. When XRP was trading at about $1, he predicted a tenfold gain. He understands. His focus is on the future. Also, I feel compelled to inform you that there are regulations to adhere to within the crypto community. And while this particular statement by Raoul Pal, all of it is prohibited here, is a more recent motto from Rob Hall, I've been following a strategy similar to his for over 6 years. On a day like today, when individuals are making foolish financial decisions based on their emotions, this is really wise advice that you should listen to and comprehend. Let me be clear before we continue, I am not a financial expert and I do not have any sort of financial background. Also, you shouldn't base any purchases or sales on what I say, right? As a pastime and for pleasure, I love producing films on YouTube regarding crypto-related subjects. I'm simply an enthusiast. As you may have heard by now, Bitcoin did go below $40,000 XRP, reaching a low of about 52 cents when this tutorial was recorded. Therefore, this message is worth listening to. Many of you may recognize this as a photo of Raoul Pal, yet, this has been discussed in crypto media, even on this very page. Take a look at this headline, Ruin It. Now that you've read the post, I'll tell you precisely what the expert stated on social networking platform X. Investors should take note. Let's skip the nonsense and go right to the point. I see. He has this list, and he conveyed this message on January 6th. He neglected to affix little bullet points to it. But it's just a list of things he wrote. Lack of leverage is at the top. Is that all, people? The reason you should not have used leverage is now crystal evident, isn't it? Liquidation is a real possibility in the cryptocurrency market, and I can't help but wonder if the thousands of % profits made over the past 15 years have really translated into riches that can change people's lives. That's just not going to cut it, I'm afraid. To that leverage, you must apply a multiplier effect. Like, what the fuck is wrong with having zero leverage? No, that's incorrect. Isn't it foolish to do so? In no world. Next up, there's zero FOMO, fear of missing out. Plus, it appears to be rather simple, doesn't it? Right? Unfortunately, many investors, particularly those new to the cryptocurrency market, make the mistake of jumping on the bandwagon and thinking that just because something starts to rise in value doesn't imply it's good. The trend will be upwards. Unfortunately, it will likely be too late by the time you realize this. As a core bank, the next 3 or 5 assets are vital. So, in a number of interviews, I overheard him discussing this idea. His usual advice is to make sure you're holding high-quality coins that are truly theirs and have some real utility. Everything is the same. Herein is my justification for stating that this speaks to me. Simply put, I've been living by the mantra utility matters since 2017 and I'm certain that we will succeed. This is just another way of putting it. You should visit the coins to see where the action is, where developers are working, where people are developing, and so on. So, sure, you simply hold on to him if you have a bag of them. He continues by suggesting self-custody or multi-sig, along with proper wallet hygiene. Also, everyone. Many of you are probably listening right now. You have, of course, been left out. If you're listening, I know that many of you store all of your cryptocurrency on exchanges. That person should desist from investing in cryptocurrency. Too many exchanges have fallen victim to hacks, gone bankrupt, or discovered that their Ponzi schemes FTX. I see. You never know, even if it's really unlikely that Coinbase this or that would happen to you. A personal takeover may be prudent, but I realize that's not an option for everyone. Some may ask, what if I misplace my private key? Very well. After considering the benefits and drawbacks, you may decide that it is the right choice. Sure, get on over there. The issue here is that I agree with Ron Paul. It is best to pursue self-custody. The only one where I would slightly disagree is with the next one. If you're going to engage in the foolish microcaps, meme coins, and this or that, where it actually amounts to gambling, he warned that you should only exchange a little day on bag, less than 10%. Sure, he'll see to it that nearly all of your funds end up in the excellent stuff. You can get away with less than 10% if you really must scratch that itchy skin. Thus, I say, go for it to individuals who fit that description. In my case, it's close to 0%. I am not interested in it. My entire deal is for big and medium cap currencies. I think it covers it very well. The market has already done most of the legwork, so it's excellent. You may think of it as putting your money into the S&P 500. Everyone who is keeping tabs on the market and making purchases and sales has already done my homework for me. They're voting with their money and putting them where they think it makes sense. Therefore, it is prudent to have a diversified portfolio across different asset classes. So, when you bring up the idea of investing in large and mid-size coins, it's as if you were to construct your own crypto index. I see now why that is logical. And naturally, when things shift about and positions change, Chris, you keep an eye on that. But that's the general idea. After that, you simply take note of the next huddle over a longer period of time. And I'm using my XRP for just this purpose. It's been over 6 years since I first acquired XRP. I am willing to wait for as long as it takes. Zoom out and eliminate background noise, he continues. For that reason, friends, I've chosen to film this video on this particular day. The sight of blood has caused individuals to panic and turn their heads in all directions. He goes on to imply that you may anticipate 35% pullbacks often, which is a reasonable expectation. Also, we haven't experienced a drop quite like the one we had today. In general, ever since the ETFs were authorized, things have been declining. Because, if anything, that was the point at which I realized things weren't going to be okay, even if the news event that date wasn't a sale. Even though I knew it wasn't going to be a major news story, I still shouldn't have said no. Once he says, buy the effing dip, he means it. Very much so. Which means you won't be recording it. Plus, you should make your purchases at periods of mass panic selling. Subsequently, he mentions the hashtag D. This is spot on, don't mess it up. Also, he mentioned that points 6 and 7 were already in play before Bitcoin's collapse below $40,000 earlier today, so this definitely won't be the last time. The ultimate corrective low might be sudden and rapid or gradual and grinding, there's no way to know for sure. It could take anywhere from a few weeks to a month or more for some. Points 6 and 7, he says, would be dealt with across a vast horizon, while Zoom Mountain would eliminate the background noise. Very much so. You have to give yourself time on a day like today to really take it all in. In fact, I've been at this same thing. This is how I've been thinking the whole time. Additionally, there are other measures that I am doing or will take when we reach the stage of euphoria, when I may begin to withdraw funds in US dollars. After I cash out while we're in euphoric mode, that money is out of the market and won't be used for anything else, it will be used to assure gains after I sell, and that's it. I'm going to be really tight with myself about this. Even if I were correct to redirect it to anything else, it doesn't matter to me whether I thought that way. It's a hard and fast rule that I set for myself, because I am afraid of messing it up. Thus, that regulation is mine. Now, I might be prepared to put in, say, 10% until we get into bear territory. I will return to cryptocurrency with a smaller decision after it is crystal evident that we are in a bear market. That may mean we have to wait more than a year. But for the remainder, I intend to put it into conservation mode, which means I will invest it in other things, whether that's real estate, the stock market, or equities, I will decide. However, it will go into duller, more conventional aspects of finance. Sure, I can take a little and put it back into crypto if I so desire. However, the main thing is that I intend to keep working, earn money, and invest that money in crypto. I also intend to keep running this YouTube channel and investing in crypto. Then Fracky XRP came along with this. Crypto enthusiast and community member Frankie, who has been mining since 2011. In addition, she works as a financial analyst. Both the most recent post by Raoul Pal and the one I began with on January 6th were genuinely prompted by him. A big thank you to Frankie for everything because, even though it doesn't appear on my screen, he tagged me in another post. I am really grateful. That's how I stumbled into this. This, nevertheless, hits close to home. As for Frankie, he's been doing this for what seems like an eternity. It scares me how people panic every time prices go down, so someone commented in response to Rob Hall. Step back and look at the big picture. Frankie addressed the individual by saying that people are emotional. They make bad choices when they're upset. For the same reason, most individuals who are responsible for their own financial management end up broke in the long run. The ideal days to cut returns in the market are unpredictable, so you need to be ready for them in advance. Those days are quite rare. So that's why real money managers also don't mess about with cash/entire holdings when they enter and exit markets. There are a lot of reasons to include taxes, but ultimately, you must in order to profit from long-term development and recovery. Many stores sell bottles. I see. That is sound advice. And pay attention to that section. For the simple reason that this might be the video's most salient point, all of which are necessary considerations for anyone planning to invest in cryptocurrency, the most unpredictable asset class in the world, in my opinion. Frankie told me the same thing, though. Additionally, I have uploaded videos of a similar nature to my channel on several occasions. However, I thought I'd post this one because it's quite simple and to the point. This is the result of poor market timing and dimensional thinking. It explains why it is foolish to enter and exit positions and why fear of missing out, FOMO, is a valid concern. Thus, I must sell in order to pursue that opportunity. Afterwards, the item begins to gain momentum, doesn't it? I assume you're familiar with all of it. But if you're anxious about that, about the market falling or your wealth decreasing, you have no idea if you're going to have a really bullish day immediately after your sale, and the most majority of the massive dates in the stock market as a whole, which provide substantial returns over extended periods of time, really occur in the span of a few days or even weeks. Either you have exposure when that moment arrives or you don't, because your returns will be significantly lower if you miss those days or weeks. The statistics shows you're going to screw yourself if you're the kind who move in and out of positions regularly due to fear or thinking you know better, and that goes for both stocks and cryptocurrency. So, stocks are what we're discussing on the screen. However, the same holds true in the cryptocurrency market. The most significant days in the market occur very seldom. The number of them is rather small. Yes, our trend over the past 15 years has been rising. However, being in crypto usually entails a lot of rocky patches and terrifying low points, with relatively few major upheavals. Market timing is a very risky endeavor. Because of this, I am quite unyielding when it comes to my XRP. I purchased what seems like an absurd quantity of XRP to me. In October of 2020, I managed to stop myself at last. Even if a lot more cryptocurrency has come and gone since then, it is still relevant today. I did go crazy, so it's still around 1/3 of my overall cryptocurrency holdings in USD. I am still quite secure with that amount of XRP, but I have been diversifying even more since then, so I am holding it comfortably. I am, however, somewhat rigid. I'm giving this my whole attention. I'm quite methodical about this, because I think that's the only way to get the kind of riches in crypto that can change your life, hands down. This hypothetical investment in the stocks that comprise the Russell 3000 index, a broad US stock market benchmark, demonstrates the profound impact of even a brief absence from the market. What follows is an account of what happens when market timing fails, as it inevitably does. I might include the Russell 3000 index, which includes around 96% of the investable US equities markets. Thus, it's rather general. Indeed, it covers a lot of ground. An exchange-traded fund, ETF, that follows that index is also available. And this is an example of an investment. In the 25 years leading up to December 31, 2022, a hypothetical $1,000 investment that was made in 1998 grows into $6,356. Between 2008 and 2020, the value stream drops to $5,304 if you skip the greatest week of the Russell 3000, which concluded on November 28. The same goes for the 3 best months, which finished on June 22. And the grand total comes to just $4,480. Now, folks, bear in mind that we're talking about a hypothetical investment scenario here, and that over a 25-year period, you're going to miss out on a significant portion of the returns. A week's notice is all it takes. Do you honestly believe you're the only one capable of figuring out which week out of those 25 that it makes sense to skip? If so, are you that brilliant? The arrogance of the person who would consider such a thing is as ridiculous as the idea that you can like. It's ridiculous. I understand why you might be interested in crypto and the much higher profits it offers, but I'm bringing this up because I think it's important. Crypto is a good example of this idea in action. I'm telling you this because of that. It's all about that. The story goes on from there. And if you're interested in seeing a chart, it's up there on the screen. There is no tried and true method for timing the market. Focusing on the best days means sitting on the sidelines during the worst, so feel free to pause if you so choose. I'll scroll down a bit to the right. So, it seems that remaining put during good times is the way to go. Unfortunately, awful. Listen up, everyone. Staying still is both adorable and frustrating. That is completely ineffective. When it comes to doing nothing, humans are just so darn difficult. That seems simple. Sit tight and do nothing. Very well. Indeed, but when you view your net worth, you'll feel compelled to take action. No, Shep, you shouldn't do anything. Regardless, even a short burst of excellent returns can have a significant effect on overall performance if you don't do it well. If you want to be sure you can take advantage of the market's opportunities, we think investing for the long run is the way to go. And this is how it works, guys. It's simply facts and statistics. In the event that you fail to keep track of the days, weeks, and months, that is all. The same holds true with crypto. I'm simply going to make sure I'm exposed and deal with whatever comes my way. XRP has been in my possession during both its all-time high and subsequent lows, falling as low as 10 cents. Plus, 52 minutes have passed from the start of this recording, wherever that may be. Between the two extremes, I've owned it for $8 since I bought it in 2021 or something. I couldn't care less. In any case, if my argument is right, then utility counts and I will succeed. True, in my opinion. In addition, I am certain that XRP will achieve a hitherto unheard of energy price discovery. Plus, I stand to lose a great deal of ground if I turn out to be incorrect. So sad. As for me, I am, however, an adult. The hazards associated with investing in XRP are known to me, and I am aware of them. Cryptocurrency added to it is dangerous. Come on, we can't act like it isn't dangerous. There is, nevertheless, a great deal of genuine potential here. That is why this material never fails to delight me. That's the best part about managing this channel on YouTube. I'm having a fun. On this bench is my most beloved pastime that I have ever had in my entire life. That concludes it. I'm done. In light of Raoul Paul's recent statement, "Don't F it up," I felt compelled to bring this to your attention. That is indeed his intended meaning. That is the reason why it hits home for me, and why it is completely logical. You shouldn't put your money where your mouth is because of anything I write or say. I'm not a financial advisor. Please subscribe and like as always. See you soon, bye.